All right. Good afternoon, everybody. Thank you so much for joining us today. I am Lisa Partida with Home Again LA, and today we have Tom Fuentes with Bank of Hope, and today's topic is going to be your income and expenses. So take it away, Tom.
Thanks, Lisa. For the sake of my internet, I may turn my picture off momentarily because I've been having some issues. But yeah, so tonight's workshop, our topic is going to be your income and expenses. Um, I think we have two or three sections tonight. I can't remember. But the first section, we're going to talk specifically about your income. We're going to identify different types of income. We're going to list pros and cons of different ways to receive it, understanding a pay statement too, or at least a generic kind of pay statement, and then how to track income. So let's see, our key takeaway is understand your income is the first step to using it to meet your needs. So what is it? Like, let's define our key terms so that we can talk about this in more detail. So really easily, income is money that you receive. But there's like a whole different types of sources. So let's think about what are the different types of income. So first we've got earned income. Earned income is income that you can get through working. It could be wages through your job. It could be wages if you receive tips as a part of your job. It could be contractual work. It could be self-employment work. Um, there's also income that can be derived from assets or investments. So assets are things that you own. An example of income from an asset would be like interest that you would earn from your financial institution because you have a savings account with them, and that pays you interest for having that savings account. Maybe another Maybe another source of income based on investments would be something like maybe you own an index fund in a brokerage account with Fidelity, Schwab, for example, and maybe that index fund pays a dividend. That's the income that you receive for owning that index fund. Or say you own a stock and that stock pays a dividend, you get paid income from owning that stock. So that would be another example. Another example would be say you owned a business and you took um, oh my gosh, my mind went blank. You draw money from it, and oh my God, I'm drawing a blank, but maybe you also own bonds in a brokerage account with Fidelity, for example. You earn money because you own that bond. So anyway, that would be income from an assets or investments. Okay, I just thought of the word. Oh my gosh, my brain's all over the place. If you own a small business, maybe you take a distribution from the business. That's how you can get income from the business. Another thing could be public benefits or entitlements that pay. It could be something like Social Security disability insurance. It could be supplemental security income, SSI, things like that. Other benefits or other entitlements, the income the income that you could get to pay for things like food or public transportation, things like that that are subsidized. It's not a comprehensive list by any stretch of the imagination, but think about childcare subsidies, transit subsidies, SNAP benefits, housing assistance, utility assistance, things like that. And then one of the other categories that I think sometimes we forget about, and maybe it just comes with age because we stopped getting it, but when's the last time you received something like a gift for your birthday? Maybe you got a birthday card and there was cash in it or something like that, right? Um, think about a gift as an income, right? It could even be like a gift card in Amazon. That's money that doesn't come out of your pocket, right? Other sources of income, perhaps maybe something like child support or alimony as well. So yeah, tons of different types, but at least it kind of builds the groundwork for where we're headed, right? The income that you take home is generally less than the earned income you make from working. So a couple more key terms for here. We have gross income is the total income without any deductions. And then net income is gross income minus deductions, such as Social Security, and income taxes, for example. Net income is what you have to save, share, and spend. Income is also called like your take-home pay, for example. Um, if you owe money, your creditors can sometimes directly take part of it from your income and assets to cover whatever debt that you owe. That's usually called a garnishment. It generally what happens as a result of like a court order. Through wage garnishment, part of your paycheck can be withheld to repay a debt that you owe. Through account garnishment, money in an account you have at a financial institution can be taken to repay a debt that you owe. Also, also, all or part or some of government payments can be taken from like seriously delinquent debts that you owe the federal government. That could be something like unpaid federal student loans. It could be something like uh, unpaid federal taxes. Sometimes it could be like a court order, child support order, things like that. But anyway, there's different types of garnishments, and this is based upon any debts that you may owe that can come out of your income essentially. Um, so what are ways that you can get paid money very generally? So on page 4 of the participant guide, ways to receive income and a pros and cons list, right? So what you see here, we have cash, we've got paper check. I don't think our list continues, but let me just tell you what you would see on page 4. There's also going to be direct deposit, payroll card, electronic benefits transfer, and there's pros and cons essentially to each type of ways to receive income. Um, so let's talk about this just really quickly because I think this is pretty easy to understand. Pros in the cash column, generally accepted everywhere, except though, recently I'm starting to see more cashless places pop up, which is really surprising to me. Like, oh, we only take a debit or a credit card. So I would cautiously put cash in the pro category because most places accept it. However, I'm seeing more places go cashless. Cash available as money right away. It can be deposited into any account you want without any holds. Um, Cons, it could be lost, it could be stolen, it could be damaged in flood, fire, whatever, you keep it in your house. Um, can't use it to make online purchases. Can't use it for bill payments. Um, Things like that. Paper checks. I don't know how common, like when's the last time you all received a paper check? Um, I don't even know if I could tell you the last time I personally did. Um, I would say pros, it can be deposited into a checking or savings account. It could be deposited into either of those accounts using the like take a picture on your phone, deposit it, and it deposits and uploads into your bank account, for example. One of the cons to that, however, though, is that if you've had some overdrafts at your financial institution or you've had some NSF charges, there could be the possibility that when you deposit a paper check, they could put it on a hold. So I wouldn't say the money's available right away if you've had some troubles with your checking account. And just like cash, hey, that paper check could be lost or stolen, or could be damaged in an accident as well. Um, Direct deposit offers the fastest way that you can get money into your account, and it can avoid the con that the paper check has that a paper check could possibly be placed on a hold. When you have direct deposit, no holds. Funds are usually available automatically, immediately. Direct deposit reduces the need for you to physically go to your bank branch to make a physical deposit. So that's nice. And then I don't know if this is so prevalent these days, but there's the possibility that when you negotiate a paper check at some places, they could charge you. Maybe you're negotiating that check at a check cashing place, they could charge you a fee, something like that. But with direct deposit, not so much of a worry. Um, and then payroll, electronic benefits, these things are digital. no holds, safer and more secure than cash or check, availability to have the money automatically available for the most part. So that's good too. Understanding pay statements. So if you work at a job or receive a pay statement, I don't know how often we look at these anymore. I mean, I know that, for example, the last few banks I've worked at, they've used the same like kind of HR payroll system. We can go in there to look at our paper statements, but how often are you looking at yours? I would say that it's important to at least be knowledgeable about what the statement has so that you can monitor it for accuracy on the amount of money that not only is hitting your account as your take-home pay, but making sure that taxes are taken out as they're supposed to, benefits being taken out as they're supposed to. One of the other things that we might forget about that I actually recently looked at my last pay statement for because I hadn't taken a day off in like a minute. Make sure because on your pay statement it should be tracking your PTO and your sick days. I looked at mine just to see where I was at because it's been a while. But um, just remember the formats of pay statements are going to be different. Lots of other companies are going to use different HR payroll systems, but most generally, the information that is going to be on there is going to be your personal information. That's going to be your name and an address. Make sure that's accurate. And I would say, especially like if you just got a new job, get make sure you look at the first couple of pay statements to make sure that all the information has been captured correctly. Your pay period is going to be on there. Um, the pay date, the date that you actually receive your net pay. It could be the first and the 15th of every month. It could be every Friday, for example. It just depends. It's going to have your gross pay. That's how much money you earn during that pay period. It's going to have any deductions. Deductions are going to be things like Social Security, Medicare, federal and state income tax, any elected deductions, health insurance, retirement contributions, things like that. And the pay statement should show the year-to-date deductions from your employer. And then you have your net pay, the amount of money you receive after all deductions are taken out of your gross pay. And that's what we refer to as the take-home pay, right? It's going to have any employer contributions that are applicable, the amount of employer paid for benefits like your health insurance, things like that, and it'll show it year to date as well. And then, as I already stated, balances for your personal time off, vacation, sick leave, things like that. Make sure those things are accurate. I've at least ran into it one time in the past where I think it was one of the times I took like 2 days off and they counted it as 3 days off. Anyway, just make sure that that stuff is being accounted for correctly. And then there's the deduction portion of your pay statement. That's also going to have several different sections. Let's look at the required deductions first. So employers are usually required to take taxes out of your pay and send them to the appropriate filing agency. Taxes includes amount required under the Federal Insurance Contributions Act, often referred to as FICA. So you'll see that represented as FICA on your statement. These taxes are set aside by law and it's a fixed percentage of your wages. FICA taxes include two items, Social Security and Medicare. The Social Security deductions is sometimes labeled as OASDI or just SS. The acronym OASDI reflects that your Social Security contributions help pay for old age survivors and disability insurance. The Medicare deduction is sometimes labeled FICA Med or FICA-MED or just MED. Your Medicare contributions help pay for Medicare. That's the health insurance program that people 65 or older qualify for. Taxes also include money your employer withhold for federal income taxes, for state income taxes. There also could be locality income taxes that are applicable as well that may be required within the local community that you live in. There's also elective or voluntary deductions. This refers to money you decide to take that you decide to take out of your pay. For example, It can include insurance premiums, union dues, charitable contributions that are taken directly from your pay stub, any direct deposit or different allotments that you have. I remember like back in the day, I used to do a split direct deposit where I had a portion of my pay go directly into my checking account, but I also had a small percentage of it set aside to my joint savings account with my wife. It just depends. It might be different for you. Retirement plan contributions could be required deductions or voluntary deductions as well. Ask your employer if you have questions about how to read your pay statement, or how you can understand how your gross pay is reflected within that pay statement as well. This is the tricky one, and this is why I always preface like, I'm so thankful that you're all here for the financial literacy workshops that we're doing. By no stretch of the imagination do I say that I'm an expert on anything, but this is the one that I always bring up that ends up kind of being that kind of pain point, especially when you start a new job, of whether or not your employer is withholding the proper amount of taxes. And I get tripped up on this as well. And I have only been at my current bank now for about a year and a half, but I even got tripped up on this when I first started way back last year in March when I did. So I would say do proper due diligence in trying to understand, because by no way, I'm just going to say it, this is not the easiest part, which is the income tax withholding. I think this is something that we often can get wrong, and it kind of bites us in the butt when it comes to us then filing taxes, where we might have expected a big refund or we end up owing an amount, is all I'm as a preface this section. But just understand, so before an employer withholds any taxes, whether it be federal, state, locality taxes, from your gross pay, they're going to ask you to complete the tax forms. So you will complete a form for federal income tax purposes and possibly a similar form for state or community taxes. So you complete these forms and give them to your employer when you start your job. It's mostly going to be handled electronically. You might get a paper, I highly doubt it, but it'll be the same. You can also give your employer new forms at any time, right, throughout the year, if you want to make any adjustments or any withholdings of your pay further. Consider completing new forms each year and when your personal or financial situation changes. So for the federal income tax purposes, you're completing IRS Form W-4, employees withholding certificate. You can indicate that you want additional federal tax withheld above like what would be withheld based on your salary and tax filing status, or you can reduce your withholding. It's your prerogative. You can also indicate if you're exempt from withholding, which is more than likely not going to be applicable for most people. If you indicate that you want additional federal tax withheld, your take home pay is likely going to be lower, but at tax time, you might owe no additional money for taxes or you might receive a refund. Depends on your situation. If you indicate that you want to reduce your withholdings, your take home pay is likely to be higher, but at tax time, you might owe more money. And then, bottom line for this section is be careful not to have too little withheld. I think this is the problem that a lot of people I talk to run into. If you don't pay enough tax throughout the year, you might have to pay a penalty for underpayment of the estimated tax that you would owe. And rolled into that penalty, they charge you interest. No joke, no lie. Not only do you owe the penalty, you will owe interest on it, and you're not going to know what it is because it's some tax form. I can't remember exactly the tax form number it is, but it's some wonky like calculation formula that they do to figure out if you owe the penalty or not. Anyway, I digress. I would say that just make sure that you're carefully filling out the W-4 form. Do some due diligent research prior to it. so that you can figure out based on your pay, and not only based on your pay, if you're filing jointly with another person, you're going to want to find out what tax bracket you would be in based upon your joint income. But just tread lightly with this subject because I'd hate for you at the end of the year when you're filing taxes to find out that you owe or you're going to get lesser of a refund than you thought you would. On page 8 of the participant guide, we have further kind of practice on understanding reading that pay statement. We have a scenario. Janice has been working for SJC Corporation for 8 months. The job has advancement opportunity, but our hours change each week. She may work 40 hours a week, 20 hours the next. She hasn't always paid attention to her pay statement, but wants to understand it. So on page 8, you're going to see a sample. I don't think we have the sample. We don't have the sample pay statement here, but we will have Janice's example pay statement. And then on page 10 of the apply it, this is an exercise that you can do that you can fill out. Complete this worksheet using your own pay statement. So after the workshop, just for like a little bit of homework, check out page 8 so that you can see Janice's pay statement to kind of get a feel of what a generic pay statement would look like. And then if you have access, if your employer has like a way that you can sign on to payroll where you can see the most current pay statement, or if you're receiving your check by mail or by paper, maybe you have your pay stub, take that and fill out the worksheet that you can kind of just get into a rhythm to understand what your what your line items look like. Um, So more than one job or a paid hobby. So some people have more than one job. I mean, I wouldn't put it past anyone with inflationary stress that we're going through at this point. Things like housing affordability. How about things like grocery affordability? I know at least for me, that's like been in at the top of my news list for the past like 2 weeks, which is actually crazy because I saw a news article today that said that grocery stores are seeing less revenue because, but well, yeah, well, no wonder you're getting less revenue because things cost so much, right? Anyhow, so the likelihood that you have one job, you have two jobs, you have a full-time job, you have a part-time job, maybe you're a contractor on the side and you have a side job which would be part of like the gig economy or you're a freelancer. Maybe you've monetized the hobby, right? Maybe you're a really good mechanic, but it just so happens that you're a full-time um, consultant for some IT firm. But on in your spare time, you've always worked on cars. Maybe you earn side money by working on cars in your driveway, for example, doing an oil change, whatever, right? Monetizing a hobby. Maybe you're a skilled baker. Maybe you make cakes, cupcakes, and other treats for birthday parties, for weddings, for whatever. In any case, you're going to receive an IRS Form W-2 if you're an employee for a company. If you're self-employed, you're going to receive an IRS Form 1099 miscellaneous. Um, So essentially, understand how you're being paid is really important because when it comes down to tax payments, it's going to be facilitated a little bit differently. Um, so you may have to pay taxes yourself. And in that case, if that's the scenario that you're in, you may want to consider putting aside extra money for future tax contributions that you're going to owe maybe throughout the quarters of the fiscal year, for example. But it just depends on what type of uh, income you receive. Many people receive income from, again, multiple sources. You can have a full-time job, part-time job. You could receive public benefits. You could receive gifts, for example. Making a list of income can help you plan how you're going to save. How much income you receive and where it comes from is important to understand. And then knowing how regular the income is can also be important. Regular income refers to income that you receive every week, maybe every other week, twice a month, every month. It's just part of your regular schedule. Regular paychecks and Social Security disability insurance benefits are an example of regular income example. But there's also income that could be unpredictable, right? That could be, um, it could vary not only in the amount, it could vary in the timing. Pay from hourly work may be unpredictable if the hours that you work week to week are, again, they're variable. It's not always the same, right? Maybe you receive child support payments that um, are variable and aren't paid on a regular basis as well, for example. Seasonal income could be unpredictable. Maybe you have a seasonal job where you're working during the winters for holidays for something like maybe you're a package delivery driver. I know that places like Amazon, FedEx, UPS, DHL, any logistics company, they're usually hiring that part-time seasonal work at the end of the year. But again, I would put that in the unpredictable category because you don't know how many hours you're going to work. More than likely, you'll do that job for 2, 3 months, and then you end up going back to the one income that you had as your full-time at your full-time employer, for example. But it could be useful if you check out page 13 on the participant guide. There's a log that's your monthly income log. You can use it like after the workshop today to just kind of understand the sources of income that you have. Check whether each source could be regular, unpredictable. You'll see on the right-hand side here, there's RUSO. You can fill in the monthly amount in the center column. And it just can kind of get you into a rhythm and flow to understand, especially if you do have things like self-employment income on top of maybe you have uh, uh, a W-2 job, but maybe you also have a public benefit or a child has a public benefit. Maybe you have some investments in a brokerage account that pays dividends. Maybe you have a high yield savings account that pays interest. Essentially, I think it's super helpful to fill in these categories, figure out whether it's regular, unpredictable, seasonal, or one time. And that way you can get that monthly amount and you can calculate it up to know what it would be. Because I don't think we have the full chart, but essentially what you're going to see is a table for calculating those monthly amounts, and it'll aggregate into a total where it's going to give you what the annual amount of that looks like a year, if it's semi-annual, if it's quarterly, if it's monthly, bi-monthly, bi-weekly, weekly. So it could be super helpful to understand the sources, the dollar amounts, and how dependable those sources can be. Um, so that'll be the closing of section one, understanding income, where we kind of just define some key terms to kind of ladder ourselves up to the next topic, which is going to be tied to understanding expenses. So now that we can kind of understand income, we'll blend in expenses so that we can kind of understand how to track and manage the expenses. The key takeaway from our next section, understanding expenses can help you decide how to save, share, spend your income. Um, so ways that we use money, and it ties into that save, share, spend. Um, Thinking about, well, we have the option to save our money. You can save your money to build a savings emergency fund. I know last workshop we kind of scratched the surface of it where we talked about, well, even if you don't have a savings account, maybe you can fund it with $50 and then we level up to 100. Maybe now we're striving for an emergency fund that's 1,000, and then we can get up to that maybe 3 months of expenses. And then maybe we can get that emergency fund up to 6 months of expenses. So that's one thing is saving it. And why are we doing it? Why are we building an emergency fund? Well, life's unpredictable. There could be an unexpected job loss, an illness that could take you out of working for an extended period of time. If you have the ability to fall back on a little cushion, then you won't have to use things like credit cards, for example. Another thing though, maybe we've established our savings. Maybe we've got that emergency fund. Maybe not only do we have that emergency fund set aside, maybe now we're contributing to our 401k. Things like that. Once we have that, we dip our toe into the water of sharing it, right? Maybe we're giving a gift out for a friend's birthday, a family's birthday. Maybe we're donating to our favorite local charity, our local cause, our local animal shelter, things like that. So that's another category, sharing the money that we've earned, right? And then there's spending it, right? Spending money for basic living expenses, whether it be food, housing, utilities, debts that you owe. I would say at least that these could be the three main categories of what we're going to do to use the money that we earn from the income that we have coming in, right? It's also sometimes helpful to think about your expenses in three buckets. So we've got the needs, wants, obligations. Needs are the things that you must have to live. Wants are the things you desire, but more than likely can live without. And then obligations is that category of the debts that you owe because you either borrowed money, such as a car loan, or maybe you bought a house or something like that. You made another type of an agreement to pay. Maybe you're renting an apartment, for example. Or were ordered to, when we talked about that garnishment back in section one, or maybe you have to pay child support, for example. It depends, right? People can consider needs and wants differently. Absolutely. For one person, a smartphone might be a want. To another person, perhaps someone with a disability, it might need the apps on their smartphone to work or live independently. For that person, the smartphone's a need. It just depends on your personal situation, right? Asking yourself if you are using your money for a need, want, or obligation can help you to consider how you want to use that money effectively, I would say. It can sometimes be hard to determine if something truly is a need, or maybe it's a want that you wish was a need. Sometimes you have to make the difficult choice between the two, I would say. Once you've identified some items as needs, you can think about less expensive ways to meet those needs. Once you've identified some items as wants, you can think about whether you want to use less of your money for those items. Once you've identified some items as obligations, you can think about whether you can negotiate payment plans or make arrangements if you can't make your payments on time when they're due. Like, for example, people may fall behind on child support payments, for example. One option might be that they work with the child support enforcement authority to come up with a payment plan. We can fall into the trap of maybe that this happened because we took out more student loans than we originally intended because our degree cost for too much. Maybe we have to call Navient, I think is like one of the biggest providers. I think they're still around to negotiate a better payment plan to facilitate the loan payments that we have, for example. Um, for people who receive public benefits, resource or asset limits may also factor into decisions about how you use your money. Resource or assets limits tell you how much money and property you can have to still receive that full benefit. It varies differently, of course, depending upon the public benefit program that you're talking about. If you build up too much of a savings, your benefit could be eliminated or reduced. So it could be helpful to learn or at least do some due diligence and research to find out what those asset limits are, because it could be different based upon whatever program the benefit is coming from. Tracking your expenses helps you understand if you're using your money in line with values and goals. And that's completely in line with the last workshop that we had where we talked about your money values and influences. I think once we've kind of established that solid foundation to understand what our values are and the goals that we have for ourselves, it could be easier to track. And the reason I would say that is that by actually tracking the expenses, you can uncover ways to make the changes, right? And I think once you uncover these things and you have that solid foundation of values and goals, you're probably more likely to make the necessary change than it would if you haven't done those foundational principles first. Tracking expenses Also has the unexpected benefit when you track your expenses, you usually spend less money. I don't know if that's always the case, but it definitely like could be. The first tool is apply it, my saving, sharing, and spending diary. And then the second tool is my monthly expense log, which is in the participant guide. Once you completed those two tools, you consider making changes to yours. Let's look at what this looks like. So on page 16 of the participant guide, we have the diary. You're going to write down what you save, share, and spend each day, preferably for one a month. Check if the expense is a need, want, or obligation. You'll need to make copies of the worksheet before you begin for your tracking purposes, or you can do so um, on your phone as well. But I think that this is a good, at least, next step to kind of understand um, things that maybe you can reduce or at least cut out. And you can at least see the first two examples that we have here is lunch at a restaurant and a bus pass. I mean, we start off kind of with a no-brainer. I mean, the lunch at a restaurant more than likely can be something that is obviously a want that maybe can be cut out altogether if we meal prepped at home and brought lunch to work. Not saying that we're not going to eat out at all during the week because I do consider it a treat. I'm not crazy. Um, it's nice not to have to go through the process of preparing your meal. But when we compare it to something like a bus pass, which is a need, especially if you're using it to get to school, get to work, get to whatever, that's a necessity that it's more than likely not anything that could be reduced or taken out. But anyway, um, you'll see that it's a daily log. It'll be aggregated to understand what it is on a weekly basis that can get you to a monthly basis. But I think tracking it is useful, especially if you're able to grab your checking account statement from your bank. Maybe if you do use a credit card for some purchases, but just look at it because it might be illuminating and eye-opening for you to not only worry about the category of NWO, need, want, obligation, but to see where you can kind of cut out or reduce a little bit so that you can increase your income. Because again, one of the things that we always talk about in these workshops is that there's really only two ways to increase income. One is to get another source of income, which is get another job, monetize a hobby. And then the other way, decrease expenses. Really, it's the only two ways. And then we also have on page 18, we have the monthly expense log. So using the information from the saving, sharing, and spending diary, we then jump to completing the monthly expense log, which is going to help you organize and categorize how you use your money, which is going to build yourself into that spending plan, right? And we don't have it here, but essentially what you're going to see in the log is those three buckets that we talked about: my saving, my sharing, my spending. You're going to have categories, and then you're going to have categories where you can write in if a category needs to be expanded. But essentially, in the expense log, we have my saving. Where category number one, we have saving towards an emergency fund with an amount, and then two blank savings towards what? What is your goal? What is the amount? And you can write a note to yourself as to what it is, and then we have the total. We have a my sharing, sharing with family, friends, charitable contributions, any other things that you want to put in that monthly amount. And then we have the my spending, which is probably where you're going to spend the most amount of your time, which is going to be like living expenses, whether it be rent, whether it be your mortgage payment, property taxes, insurance, water bill, electric bill, gas, trash, cell phone, internet, cable satellite, car payment, car insurance, maintenance and repair for your vehicle, fuel for your vehicle. Maybe you don't have a vehicle, maybe you don't use it often, maybe you have that bus pass, maybe you're in the public transportation category. There's a category there. Health insurance. student loan payments, credit card payments, um, child care, elder care, groceries, eating out, you name it, pet care, pet insurance, entertainment, fun money. That's where you're going to spend most of the time. But I think it's the necessary building block that's going to allow you to build that spending plan. Yeah, there's so many different terms that we can throw around. Essentially, what we're doing here is we're building a budget. I say budget's kind of like a boring word that no one wants to set and make a budget, but essentially, this is what we're doing. It could be a spending plan, it could be a budget, whatever. But I think by doing it, by seeing it, by laying it out, it could be super helpful to understand the next step because then you kind of have something that you could make yourself accountable to for the most part, right? So, what about managing expenses? Managing expenses so that you can make payments in advance on their dates so that you can avoid things like late fees, interest on unpaid balances, negative credit report entries, loss of services. God forbid we miss multiple rounds of like an electricity bill and that gets turned off. Additional charges associated with a loss of service, which could result in higher restart charges and things like that. Um, there could be different ways to pay bills. Man, you could do it in person, you can do it by mail, you could do it electronically in an app. Each has its pros and cons. If you have the ability to set up automatic payments electronically, either through your bank, through your financial institution, or whether you can set it up on the company side, um, I'd recommend you do it. But of course, this is kind of one of those easier said than done things because if we quite literally do our monthly spending plan and realize that there's not a lot of money left over, we may not want to have things set up on automatic payments because we may have to make sure that we may have to cut back somewhere to make sure like our credit card bill gets paid on time. All I'm saying is that if you have the ability to pay things electronically, it's going to be faster. It's going to be um, the charge is going to be taken out rather than you making that payment like by mail, for example, with a check. But if you have the ability to, I would recommend setting something up on a automatic payment if you're able to. On page 22, we have a scenario with Juan Carlo, who's using a monthly payment calculator to kind of take charge of his bills. Um, a few years ago, it seemed that Juan Carlo, like he could never get ahead of paying his bills. Paying late fees on one bill would mean that he didn't have enough money to pay another bill on time. So he started using a monthly payment calculator to manage his spending. He first lists the expense he must pay regularly, then he completes a monthly payment calendar. And we don't have it here, but essentially what we have on page 22 of the participant guide, if you want to kind of use this, and it's going to be in conjunction with the spending plan that you are writing out in the participant guide from the previous couple of pages that we talked about. We don't have it here, but essentially we have Carlos payments. He's got his rent, car payment, student loan payment, his cell phone bill, credit card payment, and car insurance. We have his monthly amount. We have his due date. You can follow along, fill out your own monthly payment category. But one of the other parts that we have in the table that's also useful that kind of goes back to us talking about how you can manage the expenses by understanding the ways to pay your bills is that it also has a payment method category as well. So it's going to have the category of the type of monthly payment, the monthly amount, the due date, and the payment method, which is going to be in person, by mail, whether it be an automatic payment to the credit card or you've paid it online. You can also fill that out so that you can understand your own like financial category for your the way that your bills are being paid monthly too. You might be able to uncover a bill that you have the ability to set up on an automatic payment because maybe it's a lesser amount of some of the other ones and maybe it's less vital than maybe your like mortgage payment, for example. Anyhow, that brings us to the end of the section and the completion of our income and expenses workshop. So understanding your expenses will help you decide how to save, share, and spend. Um, Happy to answer any questions that we might have. Um, I know that this one kind of is one of those kind of broad topics, but I kind of think it's one of those like if you do check out the participant guide and actually kind of do those try it sections, I think it would be super helpful in kind of understanding um, the income category, the expenses category. That way you can manage the bills and kind of understand because you're filling out the weekly log and the monthly log to know the amounts that are being paid, how they're being paid. Because not only can it uncover something that you may want to cut out or cut back on, it might force you into realizing that I'm spending too much on my car insurance and I need to go shop around, for example. So that's another thing that it could reveal.
Any other questions? Go ahead, Jessica.
Yeah, so I do have a question. That was really helpful, and I like that you pointed out the car insurance thing at the end because that's kind of where I'm at, where I'm like, oh, I think I could be paying less. So
Yeah,
and just potential more income, right? If I lower, or if I shop around for car insurance. But you mentioned the participant guide. How can I obtain a copy of that? Because there was a lot of information that was shown on the screen, and I'm like, that would be helpful for me to
yeah.
kind of complete.
I can go ahead and drop it in the chat. Hold on one second.
Oh, that would be great.
But I'm glad you brought it up because one of the other categories too that I think people are spending way too much money on, and I don't know why. But when you fill out the log for how much you're paying for your cell phone,
Mhm.
it still baffles me to this day why people have T-Mobile, Verizon, AT&T. Who are the other big ones? It doesn't matter. Um, for like the last 4 or 5 years, we've been using, I think we started with like there's the smaller companies that basically piggyback off of the major lines. So like
Mhm.
we've used Spectrum for the last like 5 years. They use Verizon towers. It's $30 a month.
Oh, wow.
Another
That's a,
another
yeah,
one is
significant.
the other one's Visible Wireless. There's Mint Mobile. So it's like when you write out these things and you say like, why in the hell am I spending $90 a month on my cell phone bill when there's quite literally other sub companies that use the same phone towers as the big companies, and they're charging you $25 a month. But like there's no reason you need to spend that much. So anyway, once you kind of realize that I'm spending $90 on my internet even, well, there's usually at least two or three providers in most neighborhoods. So these are things that like I think once you write down, you'd be like, I could probably save money.
Yeah, that's good to know. I mean, I'm paying, I think, for two phones, 175. So if I can bring that down significantly,
Oh,
it'd be
wow.
great. Yeah.
That's a
Yeah,
lot.
I think I'm at 70 a month with Spectrum with two lines.
Oh,
Two
wow.
lines?
Yeah.
Spectrum. I didn't even know that. I didn't know they did that.
So,
Good to
and
know.
again, like we said, two ways to increase income, right? Increase your income by getting a promotion, by working another job, monetizing a hobby, or cut expenses. So if we can cut off our car insurance, if we can find another cell phone provider, another internet provider, I mean, 25 here, 50 there, whatever. I mean, you can you can apply it in other ways. So it's possible.
Yeah, definitely. That's good to know. Yeah,
Yeah.
good information.
Thank you for that Spectrum tip. I'm actually going to look into that. Maybe they can also reduce my internet bill.
Yeah, and you know what? One of the things that they're running right now, in fact, look up Visible as well. Visible uses Verizon towers. I
Hmm.
can't remember which one's running the promotion, but they'll buy you out if you currently owe money on your phone. So like you
Okay.
know how like you'll upgrade your phone, but then they'll charge you monthly for it. So
Mm-hmm.
if you currently are owing money, they'll buy you out. So
Okay.
look into it.
Thank you, Tom.
Yeah.
And thank you for your participation, Jessica. We
Yeah,
appreciate
thank
it.
you.
All right. Thank you guys. We'll be
Thank
in
you.
touch.
All
All
right,
right.
have a
Take
good night,
care.
y'all.
Bye.
Bye.